You talked about the Qs as the way you were principally playing this move, right?
Correct.
Which now you've sold.
I have.
Why? What does that say about your belief in what this move has left?
First of all, the technicals do work. The technicals got me into this trade with the break above the 50-day moving average at 292.5. Sold the Qs today at 322. That's a 10% profit, one of my better trades so far year to date. The reasoning behind that is as price continues to move higher, the risk in the positions that you have towards a lot of these growth names increases. Let's remember.
And the risk reward decreases.
Absolutely. Now, let's remember something. It's not just that I bought the Qs. While you were on vacation, the July 5th, I bought NVIDIA at 149. Where's NVIDIA right now? 190?
Yep.
I bought Chipotle at 1290 along the way. I've bought Datadog, and more recently, I've bought Uber. So I'm clearly, and then the Joe T is increasing its position to technology. So I'm clearly stepping more towards a growth strategy. So with all that being said, it made sense to take profit in the QQQ, especially after what I witnessed yesterday, in particular to one stock we'll talk about in a minute.
All right, good stuff, good tease there. The significance of this move really can't be understated, overstated. It's one of the reasons why the market has been able to do what it has and why people are still optimistic that there's more left. These things have technically taken back some key areas, like Apple, back above its 200-day moving average. 4 straight days closing above that level cannot be just written off.
Okay, but I will argue that we are overstating it because I think we're cherry picking. If we look at just Apple, Amazon, Google and say, wow, they're so far off these 52-week lows, I'm going to say, you know what? So is, and I'll look at my portfolio, United Rentals is 40% off its 52-week low. Bristol Myers, 37, XPO Logistics, 34, AbbVie, 33, Applied Materials, 31, Aptiv, 30. I think this is much bigger. I don't think this is a former FANG statement. I think this is a statement that the market probably really did bottom in June. I think the leadership is broadening out. I think you can win by playing growth. I can win by playing my dividends and more value-oriented growth stocks. I think we're going to see divergences in performance that are much narrower going forward than what we've seen in the past 5 years. I think this is a much bigger thing at play than just the return of our formerly known FANG stocks.
Okay, so let's bring in Weiss. Weiss, I think you're on the phone. You've been more negative than all, at least in terms of our investment committee, on where this market is. But I see some significant moves here from you. You bought Apple, okay? You bought Alphabet, you bought Amazon, and you bought Qualcomm. Weiss, do you run fast? You have good track shoes on, Weiss? Because you're a chaser. Weiss, Apple's up 27.5% from its lows. Qualcomm's up 26%. Amazon's up 39%. Alphabet's up 15%. Now, you're buying them now?
Well, let's put this in perspective. First of all, I have had a lot of cash, didn't see the move coming, but got involved in the move. And I can't have any ego, as most good investors don't. As a matter of fact, every good investor has no ego. And I've got no institutional memory that's going to dictate when I'm going to buy a stock or not. So if I think the market's going to move, and the best way to express that move is in the stocks that you mentioned, I'm going to do it without concern about people commenting, do I have running shoes on, stocks up 27% or whatever. I mean, look, the best traders I know don't have running shoes. They have private planes. And that's Steve Cohen and Dave Tepper, both people who I've worked with and worked for and managed money for, and that's where they go, Scott. So,
okay, I hear you.
Yeah,
I hear you, but then you can't. I guess part of my point, Weiss, is that you can't tell me that you bought these stocks today and then tell me tomorrow that you're negative on the market. This is somewhat of a signal to me that you think there's got to be something left in this move, or you wouldn't move into these names now.
No, that's correct. And I didn't buy them today. I didn't buy them yesterday. I bought them over the last couple of weeks, and I've also added to GXO before and after the quarter. Phenomenal blowout quarter, 20% organic growth.
I get to those
later.
Moderna. I get to those later. Okay. Don't front run the whole show, Weiss. I mean, I can't see your face and you're on the phone, so I can't give you dirty looks so you understand what's going on. But don't front run the whole thing. Weiss, Joe has something for you.
Steve, I don't know if you watched Jim last night on Mad Money, but I think he made some excellent points related to what we're seeing right now in terms of positioning with oil. How much of the move that we've seen recently, in your view, is about just repositioning away from oil and now moving back into a lot of these mega caps? And then does the risk become, well, if oil finds stability and begins to bottom, those flows reverse again?
I don't think oil's had anything to do with it, really. I think that the overall commodity complex trading down, and this move started while oil was still nicely above 100, not below, and gas was still higher. June was one of the best months we've seen in a long time. So I don't think that really had much to do with it at all. On the margin, possibly, but oil's not going to dictate where this market's going. Of course, if oil trades 200 a barrel, as every brilliant commodity analyst was saying it's going to, because they always say 200 when it breaks over 100, that's a different story.